Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1033A, and today's date is July 27th, 2016, and the title of the episode is U.S. Government Central Bankers' Fictional Economy is Coming to an End. Now, before I get started, I just want to make an announcement. I just uploaded an interview with Greg Manarino. He is on the X22 Report Spotlight YouTube channel, so you can go right over there, play the video there, or you can go to the x22report.com site. You just scroll down a little bit, look over to your right-hand side, you'll see the video there, and you can play it, or you can go to newssentinel.com. Same thing, scroll down a little bit, look over to the right-hand side, and you can play the video there. Let's get into the economic collapse financial news. Now, today we can see that gold has popped up. It has moved up quite a bit after a long week of suppression. And we're starting to realize that this entire fictional economy is being ripped apart at its seams. And it is getting worse and worse day by day. And when we look at the housing market, and I know I talk a lot about the housing market because it is very important to understand that when people see prices starting to fall, traffic drying up, and houses not selling, the mindset of how the economy is doing, well, it turns. And people start to question. People look around and say, what is going on here? Because if the economy is doing well, you would have the real estate market expanding. You would have mortgage departments inside banks expanding. But we see the opposite happening. It is contracting. Now, a Chicago-based real estate investment trust Equity Residential lowered its guidance during the first quarter earnings call. Now, they're expecting their revenue to drop by 5% due to a luxury apartment slowdown in Manhattan. And what they're saying, and this is coming from COO David Santee, New York City just turned very quickly and more deeply than we expected. Now, they're explaining why this is happening. And for those people who believe that the unemployment is a true number, well, I have some bad news for you. If you believe that people are getting these incredible high-paying jobs, well, I have some bad news for you. Because what we're seeing right now, and this is coming from the EQR, that San Francisco and New York, which account for half of the equity residential projected revenue growth, are seeing a slowdown in hiring for jobs that pay enough to enable renters to afford the new luxury apartment, and they're seeing it in these cities. Now, we've seen this before. This is nothing new. This is just more proof to back up everything that we've been seeing. And we understand that the U.S. government central bankers, they love to manipulate numbers. Well, they manipulated the new home sales. They make it seem like the housing market is increasing, doing much, much better than it really is. Actually, we're at 1963 levels, which is absolutely awful. And then we come to pending home sales. Well, those are completely awful. Pending home sales came in at a 0.2% month-on-month rise. They were expecting a 1.2% rise in pending home sales. Now, Larry Yun, the National Association of Realtors representative or president, has come out and said home prices are showing little evidence of slowing to a healthier pace that more closely mirrors wage and income growth, which what he's really saying is that prices are coming down. And we're starting to see this with Case-Shiller, and we're starting to look around the country, and we're seeing prices dropping. Now, the Realtors Group said last week that sales have peaked for this year. That's it. This is what we got. We're in the middle of summer where people are buying, and they're saying this is the highest for real estate. Why? Because buyer traffic has slowed in recent weeks. We've seen this in 2008. Traffic was slowing, prices were coming down. Actually, what it really means is that people are now chasing the market. The market drops by 50,000. People put their house up. They think they're going to get this incredible price for their home, but they realize that the prices have already dropped. Then they try to lower it 10,000, and the market drops another 20,000, and they're always chasing the market down. And people run into this problem quite a bit. And this is why we're seeing this happen across the country right now, because people are not out there purchasing anymore. Traffic is drying up. Mortgage applications to buy and refinance dropped by 11%. And we have to remember how this whole entire economy is built. It is built on 0% interest rates, subprime, 0% down. Anyone that has a heartbeat, you can get an automobile, you can get a car, you can go back to school. It doesn't matter. Blow the bubbles up. Well, it's coming to an end. It cannot be sustained. We're looking at all the economic indicators. We've been tracking it, reporting it from the beginning. And we see right now that Janet Yellen was out there today saying that, the economy is strengthening, but there's still weaknesses here and there. They didn't raise interest rates. Meanwhile, the durable goods report came out. And it's showing that durable good orders, they're at negative 1.3%. Orders came in at negative 4%, and last month was revised from negative 2.2% to negative 2.8%. So is the economy getting better? No. Manufacturing right now clearly remains in a recession/depression. It is a complete disaster. The economy is not improving. It is getting worse and worse every single day. The Baltic Dry Index, it has fallen by another 17 points. It is now at 679 points. And when we take a look at what has been happening, and we go back in time, we've been seeing stores close day by day, hundreds of stores, not 10 or 20. We're talking hundreds. People are being laid off. People are not purchasing. People don't have the high-paying jobs. GDP is declining. Unemployment is completely fake, phony, and false. The housing market, it's a disaster. We're looking at 1970 home ownership right now. We're looking at new sales at 1963 levels. The debt is reaching 20 trillion. When we start to put all this together and we look around the world and we see the European banks in trouble, needing bailouts, and the central bankers are looking at the entire situation, and they're talking about wealth tax, they're talking about carbon tax, they're talking about bail-ins, they're talking about negative interest rates, they're talking about all these different things that help them, not us, the people. Everything they talk about, really think about this for a second. Everything they discuss and talk about allows them to keep their system propped up. What does it do for the people? Does it change anything? No. Has QE changed anything? No. Has it created jobs? Well, that's proven now. It has not. Has it increased GDP? No. Has it helped the retail sector? Are there more stores opening? Or is there hiring in retail? Absolutely not. We know rail traffic, we know trucking across the country is declining. Did it help that? Absolutely not. Has it helped housing? Well, only in their select cities where they pumped up the bubble. But the everyday person, they're sitting on the sidelines. They're not going out to get mortgages. Even when they're offering 0% down, subprime, people are saying, listen, I don't want to get involved in this once again. I was there. I don't have a secure job. I'm not making enough. So when we start to look at this, and we look at the central banks, they don't help the people. They help themselves. Because they're in it for themselves. They have no allegiance to a country, a group of people. The allegiance is to themselves, to profit, to control. And what we're seeing right now is the end game. The system is ripping itself apart. It's fiction. And of course, once the economy falls and everyone looks back in time and says, oh, this was the cause of it. We understand now what happened. It was a lie, because this is what happens. In 2008, what did everyone do? Oh, the Fed lied to us. The subprime was the problem. We saw what the bankers did. The government did nothing. The people had to bail them out. And this is what everyone is going to do this time. They're going to go back in time and say, I wish I was prepared. I wish I was ready. I wish I bought gold. I wish I had cash on hand. I wish I had supplies. If just someone would tell me that this was coming, I would have been a lot better off. And we've been tracking this day by day, so you are not blindsided like almost every single person was back in 2008. Now, I'm not saying it was everybody. There were people out there that were awake. They saw what was coming. But we've been tracking. We've been documenting. We know what it's about to happen, and just by the reaction of the U.S. government, the central bankers, we can see we're getting closer and closer to the end. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.